Hello everyone! Welcome back to TRI's ongoing tutorial series with Coinigy on using Fibonacci measurement tools. We're going to go ahead and load up our price chart here. You notice that we have a Bitcoin bit stamp on the daily chart here. Part 1 of this series was Fibonacci retracements. Part 2 was Fibonacci extensions, and in this module, part 3, we are going to study chaos theory. I won't get into the specific maths of chaos theory. We'll leave that for your study on your own. You can Google, and of course, by all means, come on therationalinvestor.com, and we teach and talk about chaos theory extensively. But for the purposes of this tutorial, we're just going to show you how to set up the levels on your price chart and how you can use this tool going forward. So first things first, as we said, we have the daily Bitstamp Bitcoin chart up here, so we can put away the extra tools for the time being. We're going to take our mouse and we're going to scroll over to the left-hand pane, and we're going to select the third tool down, Fibonacci retracements. Now, we're not going to do retracements in this particular study. We are going to do, they would be classically considered extensions, but they are specific numbers that are relevant to chaos theory. So, you know, at any given point in time, we always want to ask ourselves, and I always think it's a good idea for new students, new people to trading, just to write on your chart, what question does this study attempt to answer? And what we're looking for specifically with this particular study is we want to answer the question, what is a realistic price movement following a trading range breakout? What is a realistic price movement following a trading range breakout? Yeah, I think that works. So, how do we draw this study? As I said, third study down, we're going to select the Fibonacci retracement tools. But as you notice, when I draw this, you'll see that these are not retracement levels, these are extension levels. I think for the purpose of this tutorial, we'll limit the study to these three primary levels for chaos theory. Those being 2.618, 4.669, which is technically the bifurcation level that's most important, and 8.77. The way that you draw this tool is you want to identify a trading range. So you notice that I have 1.0, that's the top end of the range, and 0 is the bottom end of the range. So here, for example, you'll see that how do you define a trading range? Well, the easiest way for you to define a trading range, in my opinion, is to look for market structure. And what do I mean by market structure? I'd like to see a nice W in price. In essence, we have a situation here where the trend was pointing down. The market ran into demand, which turned that equation around. So demand overwhelmed supply and pushed price up. Now at this point right here, we can put our little s over here, supply now overwhelms demand. So price heads back down. Then you see we run into this level here demand steps up and it overwhelms supply. So quite literally, there's a battle in the marketplace between demand and supply. And the breaking of this level right here implies, number one, that this was a trading range from this point here up to this point here. And if we break through the high here, then it means that demand overwhelms supply. So you could think in very real terms that this battle zone, there's a lot of energy all being built up inside this zone. And that energy needs to express itself and further move up. And the way that it expresses itself is through this chaos theory and these levels. So the way that I've personally found that this works best is we're going to measure off of this right-hand side of the W, back up to the supply peak, the middle part of the W, and now we have our extension levels that are basically based off of the energy dissipating from this huge battle in here. And so in very real terms, we will take the top of our study, and if you want to put the little magnet button on, that'll help. So there's that. Then we're going to take the bottom of our study and we're going to project it off of whatever the lowest low is here on this side, which I think is that low there. 16,293, and this low here, 16,337. So yep, 293 is lower. And now you see that we have some levels to work with heading higher. 2.618 sure looks to me like the market respected that. We had a small pullback and then pushed higher, which means that we probably want to head up into this 4.669 level. This is a way you can use this study in real time. I mean, you can also do this study just off of this range because you can literally think of this as a big W. It's not a pretty W, but it is a W, and it does meet this metric. So that means we can take a study off of this low, back up to that high, and notice, look how the market stalled out right at that 2.618 level. Incredible, eh? And quite often what ends up happening is the market will rally up to this 2.618 or whatever the next level is, and then back off and test the original breakout level, which is exactly what happened right here. So since we came back, tested this level, it broke it. That means that this study is now basically off the table. What it does mean is we could technically infer that this is a big W, which means we could do a study from here all the way up to here. And let's see where that paints levels. Notice. And this is a really cool aspect of chaos theory, is you'll see that we have what I like to call confluence. So notice that this 2.618, it's kind of floating out in the air, but notice that this 4669, remember we had said this 4669 is still valid because this level has not been breached. So, but notice how this 4669 and this 877 happen to line up nicely together. I mean, we'll only see after time what happens, but let's go back in time and let's use this tool to see if it could help us see some levels in the future. So here you can see a very nice looking W, down, up, down, breakout. We can think about our supply and demand battle, and we can start drawing studies off of this zone. This should be an interesting one to do. So we can go from this low back up to this high. Not bad. Notice 2.618 off of this particular range takes us right up against these previous highs. You can see how the market pushed above it, but then was kind of waffly, had to come back down and play with that level and then accept higher. And then notice this 4669, same sort of thing. We rallied up into that level. We tried to push higher. Then the market said, I don't know, I don't think so. Had to come all the way back down below and then swish around. And interesting, notice how we actually M'd out pretty much just a little bit above that level. And then boom, back down we go. How about this bottom? Notice this low seems to be lower than that low. So we can draw from here up to here. And so you have your big rally up top. And notice 2.618. Look how the market oscillated around that level. So it works as an excellent sort of keep you honest indicator. Notice 4669. If you had drawn this study originally off of this low, and playing the whole bull market up, once we got up into this level here, we've talked a little bit about horizontal support and resistance previously, but I think you can understand there's probably going to be some traffic up in this area. There's the 4669 level, and notice the market got up into this area and started to really run out of steam in here. So I think that this is a very relevant level there. Let's see, can we do one to the downside? This might be interesting doing this entire pattern. It's a little bit big, but if we now take the same logic and go the other direction, so from that high down to that low, there's 2.618, but we didn't quite hit that. Pretty close. Might have drawn it off of the clothesline levels, and you notice on the clothesline levels, that was very respected. So another way for you to consider using this tool. Look at this nice little W here. So you could have had this big run up, this consolidation, then you use this tool. All right, looks like the market wants to head higher. Where is it likely to go? So 2.618, it blew right through that and did a little bit of a consolidation off the level and said, nope, I want to go higher. And notice it rallied right up into 4669 and then had to come right back down and check the 2.618 level. See that happen a lot in trading. All right, so there is, I think, a few good working examples of how you apply chaos theory to your price charts to help you validate price objectives. Probably a final thought, if you did watch the Fibonacci retracement tutorial, remember we're always thinking about confluence. So if we're considering, and I'll just remove everything here, if we're considering that maybe this is an extension heading higher, next level we want to have on here is actually 16. I think it's 16.88. You can take your Fibonacci retracement tool, and if you start seeing chaos levels line up with extension levels and retracement levels, then you've got some very powerful levels to work with. So for instance, in this particular case, you notice we talked about 38.2 to 50% retracements. Notice how that seems to line up relatively well with the 877 to 16.88 levels. So, my hunch is that this pattern, and really you might even argue if you also watch the extension tutorial, we could even infer an inverted head and shoulders. It's a very big one, but it's job of the market. Something along those lines. In fact, we could even go off of there. And we can start drawing extensions off of this range. And now, hopefully, what you see is a bunch of confluence. So we'll put on extension levels. Well, I guess we can do this. All right, so now we have, and we can always come in, crisp these levels up, get them nice and clean. It looks like that's the lowest low. To there. There. So, our head and shoulders study, remember from our extension, says we want to see 200%. So you can now see 877s, 200% range extension, 38.2s, and if we do horizontal support and resistance, gee whiz, I'm getting pretty good anecdotal evidence that we probably want to explore up top in this area up here. Then, as we had said previously, just for fun, we can also add on actually, it looks like I did it like this. From here to here. We can add on our chaos levels. And we start to get some pretty reasonable confluence. Interesting how 4669 lines up nicely with that head and shoulders 200% extension, which lines up nicely with that 877, which lines up nicely with that horizontal support and resistance, which lines up really nicely with actually the most recent market structure, M top, that came in here recently. So there you go. Application of Fibonacci retracements, Fibonacci extensions, and chaos levels all wrapped into one nice package. All right, I hope you enjoyed that tutorial. All the best. The only thing left for Brian to say at this point is bye for now.